Hi everyone. Today we're going to talk about the state of the diamond market. My name is Jacques Voorhees. I'm the founder of Icecap, the company that operates a diamond trading platform for investors. I'm going to divide this into two parts, supply and demand. Now, obviously, while no one can predict the future, I'd like to discuss some things to at least consider. Let's start with supply. In the last 2 years, the market has been severely constrained because of supply issues as both the mines and the cutting centers shut down over COVID. We're coming out of that, and it was always going to be really just a temporary effect. But what's it going to look like in the long term? Not counting temporary disruptions caused by COVID, there are two broad factors that influence the supply of diamonds coming on the market. One is price, as is true of all natural resources extraction. The higher the price, the more willing the miners are to find it, obviously. The other is the mine's productivity. All mines have a lifespan. One of the largest and most famous mines in the world, the Argyle mine in Australia, it closed a year ago, which deprived the global market of about 10% of its total supply. But new mines are occasionally found. Let's go to the Bain & Company report on the diamond market, which was published exactly a year ago. Quote, in volume terms, rough diamond supply growth for the long term is projected to be -2 or 2% annually at best. So Bain is forecasting for the foreseeable future a relatively fixed level of diamonds coming out of the ground and onto the market. Annual supply is not likely to change much, in other words. Okay, fine. Now let's talk about demand. In the coming years, are consumers going to be spending more dollars on diamonds, less dollars on diamonds, or about the same dollars on diamonds? The supply won't be changing much, so the answer to this question will tell us what direction the price will likely head, obviously. But before we begin, let's define what kinds of diamonds we're talking about and what kinds of dollars we're talking about. There's a new kid on the block, and it's called synthetic diamonds. Synthetic doesn't mean fake. Synthetic means created by man, not nature. We now have the technology to produce diamonds in a factory. Well, for marketing reasons, those producing this material, they like to call it lab-grown rather than produced synthetically in a factory. But what do consumers think? Well, they're buying them, certainly, not least because the price keeps going down. To quote Bain again, quote, continued advances in technology contributed to double-digit growth in production and lower retail prices for lab-grown diamonds in 2019 and 2020. Fine. So while demand is going up for both natural and lab-grown, prices for natural are going up and prices for lab-grown are going down. In other words, the market, it's segmenting, much as did the market for natural versus cultured pearls. And this makes sense. Cultured pearls could be called, I suppose, lab-grown pearls. They're not natural. Here's another quote from that Bain report. The price differential between natural and lab-grown fancy colored diamonds is particularly striking, up to 10 times. Not surprisingly, Bain adds this, quote, fashion jewelry retailers are adding lab-grown diamonds to their product offering, further positioning the category into fashion jewelry segment. Now, in the jewelry industry, fashion jewelry is a lesser category. It's different from what's called fine jewelry. Fashion jewelry generally means gold or silver plated rather than solid, and the stones set in fashion jewelry are generally what's called semi-precious. While you certainly could mount a lab-grown diamond in a 14 or 18 karat ring, and that could be considered fine jewelry, the trend line, according to Bain, is that synthetic lab-grown diamonds are being positioned in the fashion industry segment, providing obviously further evidence of how the two products are diverging in the marketplace. Well, since the invention of lab-grown diamonds doesn't seem to be pulling down the prices of natural diamond, but rather the markets are increasingly pulling apart, synthetic can probably, at least for now, be ignored by the natural diamond investor. Okay, but what kind of dollars are we talking about? And that's the problem. As we all know, the U.S. is experiencing its highest inflation in over 40 years. Does anyone think it's not going to get worse? So when we talk about the quantity of dollars going into diamonds in the foreseeable future, we have to remember there are going to be far more dollars in circulation. The price of most everything will be going up. And that, of course, is why hard assets are a reasonable thing to diversify into in the first place. But what about the actual consumer interest in diamonds? How's that going? Let's consider three trends. First is the concern for ethical sourcing. Younger consumers especially want to be reassured that diamonds are a net positive for the earth. The industry, fortunately, is very on top of that issue in terms of both the substance and the messaging. There's even an organization called, quote, Diamonds Do Good, which it highlights the positive impact diamonds are having in every community they touch along the entire supply chain. If the diamond industry can hold its own on this topic, and it's getting better at it each year, this should be a net positive for diamond sales. Second, diamonds aren't just for women anymore, or even for traditional relationships. While it's hard to imagine that today's the emergence of so many types of relationships could be helping the diamond industry, it actually is. Here's a quote from De Beers CEO Bruce Cleaver in November. Quote, "We see a new generation of consumers who wish to communicate a wider commitment, a commitment to their own personal development, to their friendships, to their families, to society, and to the natural world." According to Rappaport magazine, quote, "In November, De Beers launched a purposefully ambiguous, love that term, campaign that will continue to roll out across key markets in 2022. While the main tagline, 'I do,' has its roots in matrimony, the ads also use the wording, quote, 'to cherish bonds that last,' alongside imagery that could suggest any number of relationship types, from romantic couples to family bonds to self-love," end quote. The third and final issue is that we may be entering kind of a roaring 20s period, much like the explosion of socializing that occurred following World War I. Well, we're now emerging from our own World War with COVID. Rates are falling globally, bars and restaurants are opening, and mandates are ending. And thanks to all those multi-trillion-dollar stimulus bills, a lot of people have a lot of money right now, and they want to spend it. So my bottom line is that looking ahead over the next year, the signs are mostly all positive for diamonds. Thanks very much for listening. And again, you can reach us at icecap.diamonds. Thank you very much.